When you think about it, somebody who's getting a paycheck every 2 weeks, it's not difficult to manage your finances as long as you know you have a steady source of income. But if you have somebody whose income is not steady, it's going to have its ups and downs, but yet that individual can demonstrate that they still are able to manage their finances, manage their credit, make their payments on time every month, then that to me is somebody who is an even better money manager than somebody who's getting a steady paycheck.
The Realtors Federal Credit Union launched in May 2009 to be a financial services company that understands the unique needs of real estate professionals. Because of the irregular income stream of realtors, the fact that many of them are small business and most of them are independent contractors, they face certain challenges in the credit markets. And the credit union was seen as a realtor-friendly way to provide financial services to the realtor community.
One of the primary things that we did in designing our loan program was to first kind of step back and say, how can we design loan policies and underwriting criteria to really meet the unique needs of realtors? And what we decided to do was to take a somewhat untraditional approach to our underwriting. As I said, traditionally lenders will look at an individual's credit history, but then they'll also look for that source of repayment for the loan, and they'll want to verify that ongoing source of income. We decided that for realtors that we were going to put our emphasis on the credit side, meaning that we were going to place most of our emphasis on how our realtor members had handled their credit in the past and how they were currently handling their credit. So if we have a realtor who applies for a loan, for example, and their credit history reflects the fact that they are managing their credit, they're making their payments on time, we are not even going to ask that person to go through those extra steps of verifying their income, giving us 2 years of tax returns and so forth. So putting that emphasis on how they handle their credit. You know, obviously for those of our members that have had some credit challenges, we will have to give some consideration to source of repayment.
Take a minute and talk a little bit about how do you protect the fund. So you want to make sure that you make credit available to realtors despite the fact that they have the irregular income.
That's an excellent question, because you know, obviously the money that we're lending to our realtor members comes from the deposits that our members are making, and so we do certainly have a fiduciary responsibility to protect those deposits and to ensure that we can provide a good rate of return on those deposits. So it is a balancing act, and we have done that by crafting some underwriting criteria to be able to assign different risk ratings to our members based on their credit history and so forth. So we do look at the credit quality and determine the rates and terms that we're going to be able to offer that individual based on that. That being said, we did make the decision going in that we also understand that realtors in the past couple of years have had some challenges, as have many people in the economy. And we didn't want to design our program so conservatively that we weren't able to meet the needs of people that have had some challenges. So as a result, unlike many other traditional financial institutions at this time that have become very conservative in their lending, and they're basically just lending to the A borrower, we will make credit available to the A borrower, the B borrower, the C borrower, and the D borrower as well. It's just that the extent of the credit that we're going to extend to those individuals is going to be scrutinized much more carefully and probably limited.
If I were to open an account today, what interest rate could I expect? You know, what are some of the terms that I could expect?
Our primary share accounts, savings accounts at the current time are paying a rate of 0.50% APY. The certificate rates range anywhere from 0.85% APY up to 2.7% APY.
Jane, what's your vision for the credit union for the balance of 2010? I mean, it's already grown into one of the largest, if not the largest, virtual credit unions in the country. So where are you taking it from here?
Well, I think we see for the remainder of 2010, we expect to continue on that rather steep growth curve that we've seen so far. We expect, though, that probably after the first quarter of 2011, that growth curve will begin to slow down a little bit, maybe stabilize a little bit more. Certainly our strategic initiative is to continue to expand the products and services that we're offering to our members. We're going to be, we just introduced IRA accounts, both traditional Roth IRAs, SEP IRAs. We just received word from our regulator that we're going to be able to begin originating business loans for our members. So we have a little bit of back office work to complete on that before we'll be ready to roll that out, but that will be shortly. So that's going to be an exciting new product for us before the end of the year. So we have plans, as I said, just to continue to expand our products and services, to improve the quality of our member service to our members, and try as best we can to make their lives a little bit easier, a little bit more convenient with their access to financial services.